Hi, and welcome to this edition of the Insurance Experts. It's my pleasure to have on the line Lisa Rehburg. Lisa is actually a life settlement expert, and I'm really excited to have her on to explain the nuances of this marketplace. Thanks, Lisa, for joining us.
It's my pleasure to be here. Thanks, Mark.
Okay, so it's not every agent's path to get into the life settlement world, so I want to hear a little bit about how you got into that marketplace.
I've been in the insurance industry about 30 years, most of that working with insurance agents and brokers and financial planners and all corporate America. So I decided to leave my corporate position and focus on a niche where I could still help the financial professionals, insurance professionals that I know and love, help them, help their clients, and bring something that very few people know about. And yet I believe it's a very needed service, especially as we get older. Like, 28 in my head, right? But our demographics are this country is getting older and more seniors have life insurance policies. So I'm just passionate about it. I think it's a needed service for the insurance agents and their clients.
So how did you become aware of life settlements in the first place?
I read an article, and the article intrigued me. I thought this could be my next chapter in my career. And as I researched more and more and more, I got more excited about it because it's just not a very visible solution that people know about. And I just love bringing it to the table and surprising people that there's an option besides lapsing their policy.
Right. So yeah, tell us a little bit more about how life settlement works. What exactly is it?
What is this thing, right? It is the ability of a client to sell their policy for a lump sum of cash. There are investor groups willing to buy these policies, and the investors will obviously give the cash, but in return, they are going to be the new owner of the policy, the new payer of the premium, and the new beneficiary. So when there's a supply, right, there's got to be a demand. And so the investors are in it clearly as an investment and as a diversification tool for their portfolios.
And who are these investors typically?
Typically, we're talking about Wall Street, so hedge funds, mutual funds, college endowment funds, other insurance companies who don't want you to know they're doing this. You're never going to see their name on the contract, but they're going to be the money behind the contract.
Gotcha.
Warren Buffett's been doing this since the 90s.
Oh, really? So tell us a little bit more about what types of policies are used. People would think of cash value life insurance, but is also term life insurance used in these life settlements?
Yes, people are surprised. Term can be sold. Most of the time, it does need to be convertible, but not always. Sometimes we can sell term policies that aren't convertible still. And on average, when someone has a cash value life insurance policy, we garner 3 to 5 times cash surrender value in a settlement. So it can bring significantly better value for the client than even surrendering their policy.
Right. And a lot of people aren't aware of this. I know that the life insurance industry itself it's been a little controversial in the past, obviously, when it was first becoming popular in the 90s and early 2000s. Now it's a little bit more well established. The carriers have it a little bit more built into their pricing structure. Today, is it more of a mainstream solution? What's the kind of the evolution of that?
It's becoming more mainstream. We're seeing more people talk about it. We're seeing more financial magazines talk about it. I personally write as many articles as I possibly can to talk about it. And once again, I believe that this is the last solution, right? So the client has already spoken to their insurance and their financial professionals. They've decided that they don't need this policy anymore. They don't want this policy anymore. So instead of just lapsing it and what I call throwing it away, right, there could be an option to get some money for the policy.
Gotcha. Okay, so let's look at a case study, a client you recently worked with. Tell us a little bit more about this client and their needs and why this became a good solution for them.
Sure. So he's 78 years old. And he has had cancer a couple times. And, so I always ask, why are you doing this now? And in his particular case, he says, Lisa, look, I bought it's a $250,000 term policy, not convertible any longer. He says, look, I bought this years ago, right? So to protect my wife in case something happened to me. And my wife passed away 4 years ago. So my daughters are now the beneficiaries, but they've quote unquote married well, his words, right? They're good. Their families are good. They've got great families. They're very successful. They don't need this. So why am I continuing to pay the money on this policy? And if I can sell the the policy today to make my life more comfortable, then I want to do that. He's going to have 5 years on his term. It's going to end in 5 years, right? So he's like,
Mhm.
if I can get it now, I'd rather do that. It makes my life more comfortable today.
Interesting. So you said majority of these obviously have a convertibility feature because the investors want to continue to have that policy pay until, eventually you have to pay out. In this case, there's no guarantee that it's going to pay out. In fact, you said that there's 5 years left. So maybe there were 15 years he's been paying premiums. But because of his health condition, the investors are now willing to kind of make a bet on that there's going to be a return on this policy in the next 5 years. Is that the idea?
Well, that's correct. And so even if they need to pay, even if the investors need to pay a year or 2 or 3 of annual renewable term,
Mm,
they still will be, financially they'll be fine. It'll
I
still
see.
be profitable for them.
Okay, and so this term policy has no cash value to it, but you're able to shop the market. And how does that typically look when you're looking for investors? Are you looking at a number of different investment sources to fund this?
Yeah, correct. So we are brokers. We're life settlements brokers, and we have access to about 30 different investor groups. And
Hmm.
each investor group's a little different parameters and what they're looking for. But for instance, in this particular case, our opening offer on his policy was $15,000, and by the time we were done, the offer that sold is at $128,500. So that is the value that we
Wow.
bring clients. Our job is to represent them to get the most money for their policy that we can.
Okay, so you're basically creating a secondary market for this life insurance policy and connecting the buyers and the sellers that want to do this transaction.
Yes, that's correct.
Okay, well, very interesting. I mean, thanks for sharing with us today this idea. I mean, this life settlement market. I'm sure a lot of advisors aren't aware of this. And before your clients lapse their policy, there may be other solutions for them out there. So thanks, Lisa, for joining us and bringing awareness to this.
Oh, it's my pleasure. Thank you so much for the opportunity.